Good morning, it's Brian Egger for BreakingCall.com on September 24th. So Carnival Corp, CCL, is down 6.5% in a flat market today after it reported better than expected third quarter earnings but provided disappointing guidance. Now our take is the sell-off is a justified trading reaction because the 2014 outlook is actually soft. And we have 2 points on Carnival. First, the crux of the disappointment is the outlook for the Carnival Cruise Line brand, which accounts for about 1/3 of the company's fleet capacity. Now that line is expected to see lower bookings and lower pricing for the next 3 quarters as it rebuilds its brand image after the Carnival Triumph's disabling fire incident earlier this year. And number 2, as a result of this softness, Carnival expects revenue yields to decline 3 to 4% in the first half of 2014. And while the company looks for a positive inflection in revenue yields in the second half of next year, the prospects for full-year revenue yield growth in 2014 seem tenuous at best. So now I'll turn it over to my colleague Mike Andrade, who will discuss the technicals for Carnival.
Thanks, Brian. We will now look at the charts for Carnival Corp. The stock is currently trading off about 6.4% on a guidance revision and is pulling back toward support. The stock has been in an uptrend since a pronounced sell-off between January and October of 2011. CCL has made a series of higher lows within a fairly well-defined narrow uptrend channel, and in the absence of a technical support violation, we view the trend as up with a continuation pattern developing. Today's action remains consistent with a somewhat choppy uptrend and appears appropriate in the context of recent trading patterns. Looking first at the weekly chart, we see a narrow, well-defined trend channel with the most recent move contained in the range between 39.95 and the low of 32.06. We see important weekly support as it was on our last look near $32 and then just above $31. If support holds and we get another higher low, our technical resistance targets would be the August high near $38 and then the December highs that hit the trend channel near 39.95. Switching to the daily chart, we see a gap down below the 200-day moving average with today's lows hitting the 61.8% retracement. It is possible this first retracement could hold near $34.34. The next logical support area is the uptrend line and an 89% retracement near $32.70. The make or break level for this trend remains the prior low near 32.06, but there appears to be a reasonable chance for a higher low to hold in this case. Resistance first appears at the bottom of the gap, which lines up with the 200-day moving average near 35.80, then the August high near $38. If the shares can close above 38.04, a retest of 39.95 is then likely. Thanks for watching and visit us often at BreakingCall.com.